Today, Coinbase CEO Brian Armstrong sits down for a rare exclusive interview. Welcome to CNBC's Crypto World. I'm Kate Rooney. Digital assets recouping some of Monday's losses. By noon Eastern, Bitcoin was worth more than $21,000 and Ether was worth a little more than $1,600. All right, let's get into our main story of the day. I caught up with Coinbase CEO Brian Armstrong in a rare exclusive interview. We discussed his expectations for a crypto recovery, how the company is shifting its revenue away from fees, plus a whole lot more. All right, Brian, it's great to see you in person. Thanks so much for being here.
Thanks for having me.
You don't do many of these, so this is a special occasion that I get to sit down with you.
It is, yes.
We are also in the middle of a crypto downturn in prices. What's your expectation for any sort of recovery when it comes to crypto?
Okay, well, we never try to predict the future. I think there's this famous saying, economists have successfully predicted 9 of the last 2 recessions. So obviously we're in a bit of a down cycle here, but it's not unusual for us. We've been through 4 cycles like this as a company. We're only 10 years old. This one just happens to coincide with the broader macro environment coming down. So we all hope it'll be 12, 18 months and nice recovery, but you obviously have to plan for it being longer than that. And so that's how we think about it, and we don't try to get too cute about predicting the future.
Does it feel different, this downturn, because of some of the macro factors? You've got inflation, potential recession risk, rising rates. Crypto's been through these downturns, but nothing like the backdrop we've seen in terms of the economy right now. Is it feeling a little different?
Actually, no, it feels the same, I think, from our point of view. When crypto goes down, everyone gets very pessimistic and there's fear, and they just get distracted, they move on to other things. And when crypto is running up and they think it's everything, and there's irrational exuberance. And so neither one is true. We always say that we have this saying internally I like to repeat a lot, which is, it's never as good as it seems, it's never as bad as it seems. And I think one of the reasons Coinbase has been so successful over the last 10 years is we try not to get focused on short-term ups and downs, and we just zoom out and we think about, okay, well, 5, 10 years from now, are more people going to be using crypto? Probably. Is the internet going to be more widely distributed? Probably. Is there going to be more e-commerce and more digital payments? And so these are all tailwinds that are long-term trends. And so if we just don't get distracted and we keep building great products, we're going to do fine over the next 5 or 10 years. And
your business is so tied to trading volume. Is that a hard thing to not be distracted by the prices when it is so dependent on how much people are buying and selling?
Yeah, so for better or worse, the majority of our revenue historically and still today has been from trading fees. And so it's great in up markets. We tend to make lots of revenue, profit. That's great. Last year we booked a huge profit. In down markets, it can change very dramatically. By the way, the crypto is not entirely unique in that regard. There's other traditional, brokerages in financial services and energy traders and the New York Stock Exchange. Everybody can't predict what's going to happen with the S&P 500 next quarter. So there are other businesses that have that kind of lack of predictability. But one thing we're doing is we're shifting more of our revenue over time away from trading fees to what we call subscription and services. And so that's now grown to be 18% of our revenue. In our last earnings, we shared that. And I think that'll continue to grow over time, over many years. And that's good. It makes our revenue more predictable for the long term.
Has that uncertainty been a hard story to tell Wall Street? You're not alone. Obviously, these other brokerage firms are going through the same thing. But the idea that you're so tied to whatever happens in crypto.
Well, we are 100% focused on crypto. I think that's a pretty easy story to tell. And then the revenue volatility, again, it's not entirely unique. They've seen this before with Charles Schwab and the New York Stock Exchange, right? And so that part is not entirely different. I think the part that's a little bit unique that we're out there telling our story around with crypto is, hey, we're really passionate about economic freedom, and we think crypto is this amazing way to create more of that in the world, to go create good financial infrastructure in these countries all over the world and make even financial markets here right in the US or in developed countries that much more efficient. And by the way, it's not just about financial services. There's this whole other thing, Web3, and people are building all kinds of new apps around identity and social and games and new ways to conduct scientific research. And it's getting to be much bigger. It truly is the next generation of the internet. That's kind of a much bigger picture story to tell, which is frankly harder to wrap one's head around. And I'm still wrapping my own head around it. So I think that's fine. Every company has to start with one big thing that grows the revenue, and then you have a next act and a next act. That's the story we're out there telling.
How is Coinbase positioned in Web3?
Okay, so we're very excited about Web3. One thing that we've done is we've invested in our self-custodial wallet called Coinbase Wallet. It makes it easy for people to go out there and access any kind of new application in Web3. They can have a decentralized identity. People might have seen these names on Twitter and whatnot, like barmstrong.eth or something like that. Well, anybody can sign up and get their own decentralized identity and have this profile and begin to associate things with it like NFTs. And so Coinbase Wallet has been a really big push in that direction. We also launched Coinbase NFT, which was a great app. And actually, we're starting to bring a lot of that functionality around Web3 into our core retail app. So we launched that just in the last quarter as well, where if you want to be easily participating in any third-party application in Web3 that's out there, there's now a browser tab right in the app, and you can kind of access any of these apps, your wallet, your payment methods, everything. Your identity is already just connected. So we're trying to make this whole thing easier to use, demystify it a little bit, and I think Web3 is going to be really big.
It feels like there's still a lot of confusion around Web3. You've had Jack Dorsey, Elon Musk criticize some parts of Web3 and saying that it is centralized in the hands of VCs in some cases. Where do you stand on that debate?
Well, I think the internet is moving from Web 2 to Web 3, and so there are some apps you could call Web 2.5 or something like that today. And so they're right in the sense that they are still some centralized components of it. But to me, I see that as just an opportunity to keep moving further in that direction towards Web 3. It's hard to take the very newest apps that have come out today and kind of criticize it based on the long-term vision, because it's going to be a longer-term trend. But there's lots of details we get into there. I think you're just going to keep seeing that trend unfold.
What about big tech getting into Web3? I don't know if you categorize what Meta's doing as Web3, but getting into the metaverse and sort of rebranding to get into parts of crypto. Does big tech play a role in this new ecosystem?
I hope so. I mean, we want every company in the world to integrate into crypto, it's just like saying, we want every company to have an internet presence or to use the internet in some way, right? Even if they're not an internet company, they're going to have a homepage or, maybe get new customers through the internet or accept payments. And so crypto is the same way. I think big tech is going to have a role to play there. I think we're seeing companies like BlackRock, the largest asset manager out there, has now integrated with Coinbase. Meta was another great example. And so it's giving me a lot of, it's showing me that we can really win not only a large retail customer segment, but we can also win deals with the largest companies in the world as Coinbase, and that bodes really well for our future.
Talk about that BlackRock partnership. Were there other bids going on? Were you guys competing with other crypto companies? And should we expect more Wall Street partnerships out of Coinbase?
Well, in every deal that we go out there and meet with other companies, there's others they probably speak with. But I think they chose Coinbase in this case because we are a public company. We're based here in the United States. We've invested heavily in cybersecurity and in compliance and being the most trusted player out there. And so that was a 2-year diligence process that we went through with them, where they really put us through the same process they would with any kind of partner in traditional financial services. And it showed that I think we can participate at that level with other companies, even the Fortune 500 companies of the world. So that's a great step for us.
We've seen some other companies that have not held up so well in the last year or so, Voyager, Celsius, with what's gone on the lending side. Has that affected your business at all in terms of customer confidence in storing their crypto on a centralized exchange?
I don't think it's affected us at all, and luckily Coinbase didn't have any exposure to those particular entities. I attribute that to our risk management programs and how we underwrite risk with counterparties, which I think we were very rigorous on in that regard. But yeah, I mean, that was an interesting moment for crypto in the sense that obviously we've seen things like that happen in traditional financial services as well, so it's not entirely unique to crypto, but I think it was a moment where the industry got to look at it and say, hey, are we making appropriate disclosures to customers about what these firms are doing with their assets? And of course, if professional investors want to give money and they take on risk, I think that's okay. But if it's happening without their knowledge or the disclosures were not accurate, obviously that's a problem that needs to get cleaned up in crypto or any industry.
And Coinbase was on the path to launch a high yield lending product at one point and sort of pulled that back. In hindsight, did that help you avoid some of the issues that Voyager and Celsius have had?
Yeah, well, we did pull that back, not for the credit risk profile. I think we were comfortable with the counterparties and the underwriting there, but there was regulatory concerns which caused us to pull that back. And so I think for us that was the right choice in the sense that we want to be the most compliant, the most regulated, the most trusted product out there in the space. That's been our strategy for the last 10 years. And so if there are regulators that have a challenge with what we're doing, we're going to have a dialogue with them. And unless we strongly disagree with it, I think 90% of the time we're basically just going to follow the guidance.
Got it. We'll get into regulation as well a little bit because I know you spent a lot of time in DC recently. I do want to ask you about the stock price. So pretty brutal year for Coinbase. And since the IPO at least is down about 80%, what should investors know and what should give investors confidence that you're going to turn the stock around?
Yeah, so I think it's always important to separate what's in our control, what's not in our control in this kind of market. And of course, the broader macro environment, we don't control that. We don't even control the crypto markets. And so if you look at that, I think we're down roughly in line with our peers, right? So I try to put that part aside, focus on what we actually do control. And the things we can control are what products we focus on building, how are we managing our costs in this environment, making sure that we're well capitalized through any down period. We were really fortunate last year to go out and raise $3 billion of debt at a very attractive rate. So it's making sure that we can continue to invest not only in our core products, which are driving the profitability today, but using the profitability of those core products to invest in a little bit of the future too, so that we come out of this cycle even stronger.
And you guys have about $6 billion on the balance sheet, is that right?
A little more, yeah, it's a little over $6 billion.
What's the plan for M&A? You guys did some strategic acquisitions in the last downturn. Where are you seeing opportunity and where might you look to buy other companies right now during the downturn?
Yeah, so obviously I can't speak about any deals that may or may not be ongoing, but suffice to say we're looking closely at every deal that's happening right now. And I think that we haven't necessarily seen prices come down dramatically from where they were, but we're early in this cycle. And it's not all about price. I think we're taking a long-term view of this as well. So if there's a partner or a company that we just think, if we put 1 and 1 plus 1 together, we get 3 or 5 or something, that's a deal that we would do in an up market, in a down market. So I think we're excited about some of these M&A opportunities.
And so executives put a sort of cap on losses at about $500 million. What kind of guardrails are you putting up to make sure that those losses don't go even deeper if this crypto winter lasts longer than you might expect?
Yeah, so at the beginning of this year and really Q4 last year, we communicated that we were targeting a negative $500 million EBITDA for this year. We're roughly on track to do that despite these kind of very extreme conditions. So I feel good about that. We did have to react quite quickly, and we did a layoff of 18% of employees earlier this year. So I think some of the actions like that, you can never predict the future with business, but you can adapt quickly and try to make sure you're not burying your head in the sand or refusing to look at the truth. And so, I think through that and a lot of great conversations with our board and external folks, we've been able to navigate that environment well so far.
And a lot of the costs have been around stock-based compensation. How are you managing and sort of balancing incentivizing current employees and keeping people around with also not diluting shareholders?
Right. So this is, obviously I'm a large shareholder myself, and I'm sensitive to any kind of dilution that might be out there. Look, I think we're balancing this idea of you need great employees to build the best products in the world, and we want to make sure that we retain them. In this environment, if things are coming down, every company, I think this is not just Coinbase, is looking very closely at how well they're paying. Is that still market, or is the market changing, right? And you have to kind of take a really close look, I think, as well at the different levels, right, of people coming into the organization. Anything is on the table in the future. I think we're not alone in that regard.
Could there potentially be more layoffs?
You never want to say never. I will say that the one layoff that we put out there, it was designed to be a one-time event, but I can't tell you what the world is going to be like a year from now, and so anything could happen.
What are some of the other levers you have for costs that you could implement if you needed to scale back more and get a little bit leaner at this point?
Yeah, well, we've been looking at a number of these actually already, and a lot of the costs in the business around marketing, external vendors, even AWS and things like this, these are all things that every company, again, I think is looking really closely at. Those are the variable costs. I think generally if you have a business that doesn't have super predictable revenue, like unfortunately ours, as our subscription services is still growing, you want to try to convert as many of the fixed costs into variable costs as you can, and so that's something that we're just looking at generally.
Could that include a pullback on advertising? You guys had a big Super Bowl ad. How are you thinking about spending on marketing at this point?
Yeah, so our marketing budget has definitely come down a bit, but I think you're still going to see a variety of Coinbase ads out there.
The bouncing QR code, is that one and done, Super Bowl ad?
Well, I think that specific idea is probably one and done, but we've got a couple other crazy ideas in the pipeline. So,
Jim Chanos has been one of the notable short sellers of Coinbase. His thesis really being that Coinbase over-earns, as he put it. What is your response to Jim Chanos and others out there that might say that fees are going to erode and that costs will have to come down or fees will have to come down at some point?
Yeah. Well, okay, so I think there's the short and the medium term, and then there's the long term, right? Short term, we have not seen any fee compression to date, so that's good. Generally, we see that, especially our retail customers, they're not super price focused. They want to use the app that it's trusted, it's easy to use, they're not going to lose their money, it has the products, the assets and the payment methods and the additional functionality around staking and NFTs, and there's so many new things happening in crypto, especially on the retail side, that it hasn't become commoditized yet, right? Now, if you look at other products that we have, our exchange and things like that, these are professional investors that are high frequency, they're trading bips and matter of every kind of trade of these market makers and things like that. So I think that could change a little bit over time, but again, we haven't seen anything dramatic. Now, okay, so let's think about medium term and longer term. I do think there's going to be margin compression eventually. It has to happen at some point because everything that we're building, others eventually are going to build it and it'll become a little bit more commoditized. So, what do we do with that environment? This is why we're investing today in so much in subscription and services revenue. And we're realizing that trading fees is not going to be that thing that it's still going to be a major part of our business in 10 years from now, even 20 years from now. But I'd like to get to a place where more than 50% of our revenue is subscription and services. We've been focused on that for the last 3 years. I mean, it takes time to plant these seeds, see the green shoots, really nurture it, and get it to a good place. So we're seeing good subscription and services revenue now. It's now 18%. I think 2 years ago it was 4% of our revenue. So the trend is pretty clear.
And what would that include, subscription services? What within crypto are you looking to build out?
Yeah. So there's a number of ones today that are already showing good traction. Our staking business is really doing well. Custody, USD coin, which is a stable coin that we're in a consortium that supports that. I think longer term, we're excited about some of the things like, what I mentioned earlier, Coinbase Cloud, which is a developer tool product. There's a couple others I probably shouldn't mention, but there's a number in the works.
So some stuff behind the scenes we don't know about yet?
Exactly.
What about the NFT business? Is
Yeah.
it fair to say that's gotten off to a slow start so far?
Well, I wouldn't say it's been different than our expectations. So every time I've ever launched a product in my career, it usually starts off small and you iterate. It takes usually 2 to 3 years to try to really get product market fit on something, including the original Coinbase product and lots of other startups that I've seen. So I think, look, it's still super early in the NFT space. We saw a big run up last year with people trading Bored Apes and all kinds of different things that got traction. But I think that's actually the first step of a whole long journey of what NFTs are going to become. I think NFTs are going to influence how people do social media, how the music business works, how people put out songs, and how all kinds of creative talent is getting direct connection with their audiences. So we're still very committed to NFT. I think it's going to be a really big business, and I think our customers are really going to value, by the way, these things like, let's just natively integrate Coinbase NFT into the app that they already use, and they do all this other stuff with crypto. That's where their crypto is stored. It's where they trade. It's where they do staking. It's where they do borrow and lend. It's where they have their Coinbase card. NFT can be just one more thing in that regard. And the other cool thing we're thinking about in NFT is we're actually in the process of aggregating all the different places that people can do bids and asks of NFTs all in one place. And so I think if we can aggregate that, there's really no downside to just using it there instead of going anywhere else.
What about staking? You mentioned that as well. How significant will that be to that subscription and services revenue?
Yeah, I mean, staking has turned out to be a really good business for us so far, and it's growing really nicely. So it's important in terms of getting these blockchains to be more scalable as well. We're seeing Ethereum getting closer and closer to the merge, which is upgrading to Ethereum 2. And that'll be a nice step on the journey of upgrading, getting more scalability from Ethereum. And we're seeing that with other blockchains too, which are, the Lightning Network has been really great at going in that direction. We're seeing good things with layer 2 solutions, and Polygon, Arbitrum, and Optimism, all kinds of things. So Solana's been doing really great on scaling as well. So all across the board, good progress on staking.
So Brian, there's been a lot of excitement around staking. There's also been talk of potential regulation or at least more monitoring. You've had sanctioned protocols, really, not even individuals, but the idea that some of these might have to be monitored. Could Coinbase still run its staking business if you had to monitor really every transaction that happened on Ethereum?
Yeah, so there's a big debate happening out there right now about, if some quorum of staking validators, not to get too technical, had sanctions imposed by one particular country, would that harm sort of the global nature of these protocols? And look, I think that's a theoretical risk right now, and if it ever came down to it, I think we would rather reduce our share of the staking market, or in the worst case, even eliminate it if we were pressured to do something unnatural, because it's more important to kind of preserve the integrity of these global blockchains. Just like, the internet needs to be global, like these blockchains need to be global, and you wouldn't want to have one country kind of influencing the whole internet in an unhealthy way. You wouldn't want to have that happening in crypto either. But I don't think that's going to happen immediately. I don't think it's a major near-term risk or anything like that. So hopefully cooler heads prevail, and we're working closely with various folks in policy efforts and government to kind of hopefully be an educational resource to make sure that those kind of things don't happen.
And Coinbase historically hasn't leaned into really leverage or derivatives on the retail side, at least in the US. Is that something you might beef up eventually to compete with Binance and FTX as they move into the US?
Yeah, so I do think leverage and margin and derivatives are a really important piece of a healthy, functioning financial system, and so crypto is no exception. I'd like to see the regulatory clarity get better in the U.S. around that. We're pursuing this a little bit with our own CFTC license to launch derivatives in the U.S. We had just the very first piece of that come out in the last month. And then internationally as well, that's something where we feel like we need to get to derivatives and margin for all of our customers globally.
Do you feel like it's been a disadvantage to be publicly listed at this point? A lot of your big competitors are privately held in different countries. Do you feel like you've had to move more slowly because you're listed on the NASDAQ?
Well, okay, so some days it certainly recently has felt a little bad to be a public company, but I think honestly the same thing is happening in private companies. They're just not getting the mark to market like every day. But if they were public, it'd probably be the same thing. I'm glad we went public. I think that this is the right long-term bet because, again, we want to be the most trusted company out there in crypto. We want to be the easiest to use. And so by kind of going first, we might, sometimes pioneers get a few arrows or whatever that saying is. But I think that's fine. And it might take 2-3 years. People are going to start to see our track record that we're managing the business rigorously with good capital allocation, a focus on long-term profits. And I think that's just going to help us be the most trusted, go win some of these deals like with BlackRock and with Meta. And so I'm glad that we're doing the right thing for the long term, even if this short-term market has been a little painful.
What about the global strategy? So they're moving into your market in the US, really. Do you have big plans to get more global? I know you talked about on the earnings call scaling back a little bit when it comes to cutting costs. How are you balancing that with competing on a global scale?
Yeah, so actually I do think looking back, we may have applied a little bit too much of a US lens to the global landscape, and I would actually say that might have been a mistake that we made over the last couple of years. And so we're changing that. We've had global coverage for a while, but I think we're going to move even faster over the next couple of years. We're strong in markets in Europe. We have a number of markets on the horizon that are going to be even better with Australia and places in Japan. And so by being the most trusted, we may not always get there first, but we are going to do it the right way, hopefully. And I think there will be a real benefit to having the most legitimate company in the U.S. also have a global presence.
You talked a little bit about going first and sort of being the target in some ways. Is that the sense for regulators? Do you feel like the SEC might be paying more attention to Coinbase because you're the biggest player and you're publicly traded?
No, I think that we get our fair share of attention. We're the largest in the U.S. and we do get a lot of attention from the SEC, but they're giving attention to everybody. So I don't think that that's unfair. I guess just zooming out, we've been actively engaging with regulators, and I actually think it's a good thing. Sometimes it's reported as it's a bad thing, but I actually don't. We send petitions and information to regulators. They send us inquiries. We meet with various people every week at the company, and our overall goal is really to help drive regulatory clarity on a global scale. I tweeted out something about this recently, showing a breakdown of every G20 country. Our policy team is meeting with most of those countries, and sort of where we're seeing no regulation, pending regulation, and clear regulation for crypto. And it's just compared to 2 years ago, it's like night and day. There's basically pending legislation or active clear legislation for crypto in almost every G20 across major categories now. So I think this is really good, and it's not widely known, is that like even here in the US, I think we'll see probably a comprehensive crypto bill, hopefully passed next year. And what that'll mean is just with that clarity emerging, there'll be a lot more institutional money flowing into crypto.
Will that give you more clarity on whether something is a security or not? I know that's been something that SEC is focused on when it comes to Coinbase in particular. If they decide that the hundreds of currencies that you list, or cryptocurrencies on Coinbase, are indeed unregistered securities, what should investors know about that, and what's the potential impact for Coinbase?
Yeah, so when we meet with regulators in DC, we often feel like we're a little bit caught in the middle because we're actually happy to work with all of them. And the CFTC is obviously looking at which of these are crypto commodities. The SEC is thinking about securities. Other regulators are thinking about stable coins and even NFTs that are artwork. So obviously crypto is many different things. And it's not really, I don't have too strong an opinion about which part goes to which of them. I just think the clarity will help for the whole industry. And so we're hopefully trying to be helpful with them and helping craft some of that. But there is going to be, in some of these bills that are coming out through Congress next year, they do provide a bit of this clarity, at least in the drafts that I've seen, around what is a commodity, what is a security, et cetera. But to answer your question more directly, I think if any of these were found to be securities, I mean, it's pretty simple. We would delist them. We've always followed the law. And so if that clarity emerges, I think, especially if there's a level playing field, that's fine. We're happy to kind of put one in one category, one in the other. It's not too big a deal to us.
What's your expectation for regulatory clarity? Do you think it'll be after the midterms? What will this look like?
I definitely think it'll be after the midterms, but the good thing is that there's bipartisan support for the bills that we've seen going through Congress right now. There's one, the Stabenow-Boozman bill is one that we've looked at closely, and it does create a comprehensive crypto regulatory framework with more clear definitions of commodities and securities and other things, stable coins. So I think, yeah, I think crypto is one of the few bipartisan issues where that people in Congress are really enjoying collaborating on right now, is what somebody told me, at least when I was in DC last. So that was pretty encouraging to see, and I think regardless of what happens in the midterms, I don't think anything will change.
You've taken a pretty unorthodox approach, I think, to corporate culture. You had the mission first statement and saying essentially, some people interpreted that as leave politics at the door. At the time it was pretty controversial, but other companies have now followed suit. We've had Shopify say something similar. How is that going so far? What's your take, a year or so later after announcing that?
Yeah, I think we were ahead on that one. And I would say overall it has moved the company in a positive direction. It's helped us be more aligned on just getting work done at work, be more focused on the mission. And especially in a down market like this, it's allowed us to really rally around a common cause and everyone staying focused on that. So in many ways, I think we almost became too well known for that. And I kind of want to just turn the page on it, and I'd rather be better known for our products and all the cool innovation that we're doing. But, in a way it was good that other companies found something interesting in it, and I guess they were able to copy pieces of it.
It was really different from what others in Silicon Valley were doing. Did you hear from other CEOs behind the scenes that maybe said, hey, I would love to do this, but I can't because of the public pressure?
A huge number of them, yes. There was a period there where I think, I was just shocked by the types of CEOs that were reaching out to me to sort of want to talk about it. So yeah, there was a huge undercurrent of, I think every CEO was struggling with it, but very few people felt like they could talk about it publicly.
Wow. That's really interesting. So not even just in tech, across the board?
Mostly tech. There was probably a handful that were non-tech, yeah.
And what about decentralized work? You were also one of the first companies to go sort of without a headquarters, totally remote. How is that going so far, and how is it affecting culture?
Yeah, so I'm definitely positive on our decision to go remote first. And for anybody who's not familiar with that exact term, the way we describe it is that anybody can come into an office if they want, and we have offices around the world in various cities, but no one's required to. And so if you are going to come into an office, you have to kind of work in a way that's collaborative with people who may not be there as well. I think it's been net positive, and it's not 100% positive, but I think it's net positive. And when I say that, what I mean is that it's given us access to a wealth of talent in small towns, in various countries, that we ordinarily would have had a much harder time finding. If someone, if they have to be within a half-hour commute of one of your offices, it's just, you've automatically eliminated 99% of people in the world. So that is the high order bit to me. That's how you build a great company. It comes down to great people. And so that's been the positive. The negative is that if you just run the company how you were running it before, with nobody ever getting together in person, I think you do see some erosion of learning and development, creativity, trust even. And so what we've done is we've gotten to a place where we're not 100% there yet, but we're trying to get every employee at Coinbase to get together at least once a quarter with some of their teammates to make sure there is at least some in-person component for that learning and development and collaboration and trust building. And I think if we do that, we can get the best of the upside and mitigate some of the downside.
Okay, so I know you talked about Ray Dalio before, and sort of this is a big global picture question, but so Ray Dalio has talked about sort of the changing world order, U.S. dollar potentially losing dominance to the yuan. How does crypto fit into that picture?
Wow, that's a great question. So, and I actually had a chance to chat with him about this recently, which was really great. I'm a fan of his book. Yeah. So one way that we can think about this is that there can be a centralized East versus a decentralized West, and which would sort of give the West and Western values, broadly, a chance in this new changing world order. I don't think that most people in the U.S. are really thinking about this yet, and they still are probably have a little bit of their head buried in the sand. But if that is the way that the world is going, I do think it's even more important that the West embraces decentralized cryptocurrencies as a way to have the de facto reserve currency, if you will, in this new global world order. So it's a little bit like what happened with the internet. Certain countries, China, North Korea, they actually said, hey, this internet that's global, we're not really okay with that. We're going to make our own heavily filtered or even private internet. And I think there's going to be a couple countries in the world, probably North Korea and China again, that have private central bank digital currencies, and they try to cut off the decentralized cryptocurrencies. That should be a signal to us in the West and Western liberal values broadly, countries that are aligned to that we probably don't want to replicate that. We probably want to embrace the decentralized global cryptocurrencies, and this will create free trade, economic freedom, more stable currencies. I think it's a very positive thing for the world, and so I hope that many people embrace crypto for that reason.
So will Bitcoin be the global reserve currency?
I think at least within the crypto economy, yes. And I don't think one's not going to take over the other. It'll be more of a complement. But in the crypto economy, which I think will grow to be a larger and larger percentage of global GDP, Bitcoin will be the reserve currency.
All right. Well, Brian, we'll end on that. Great to see you. Thanks for sitting down with us.
Great to see you as well.
All right. All right. That's all for today, but we'll be back again tomorrow with a lot more. We'll see you then.